Is this just the beginning of the local Bitcoin crash? Should we be prepared for a bigger sell-off? That's what we're going to cover in today's video. And if you've been watching my previous Bitcoin videos, you'll see we're like really on the point, but with logic, it's objective and non-emotional. So if you like today's video, like, subscribe, hit the bell notification. And if you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2008. Been trading currencies for over 15 years, but now I focus exclusively on crypto and blockchain. So let's dive in. So on the 5th of September, I posted a video saying, look, Bitcoin, what should we expect next? Optimism is flooding the market. Then in the video itself, what I covered was we have this particular pattern. And I said very clearly that we should anticipate a big move to the downside when the momentum crosses over. So we did this in advance. And this was the key number, this swing low. And that's what we're going to carry on from, because we want to be able to read Bitcoin just like a book. And if we can read the psychology, we can project with high probability of what's likely to occur next. And Bitcoin does influence the rest of the whole market. And there's a few key factors that we want to take into account. So let's dive into a live chart. Let's zoom in over here and look at this. Look at this. Just textbook stuff. Now we're still early days, So let's just do a reference point. We said, look, price should get to around here and then pull back. And this is the key low that we want to be aware of. And it's the next reversal of the momentum. So look, we're playing a probabilities game and not a certainty game. And we want to take all of the information that we can to make objective decisions. So we looked at pattern, we looked at price, we looked at swing highs and swing lows, but we also looked at momentum. And that's what we're going to look into today. So right here, this was the exact arrow. So it was almost pretty much bang on. And we didn't know when it was going to occur, but we said the next clue is going to be the next momentum reversal. And look at this momentum reversal. I'm going to draw an arrow here so it's really, really clear, because this is the kind of information that we want to have. So we said, look, we've got this momentum reversal, and look at this. It coincides almost perfectly with the previous high. And even a couple of days before, when the momentum was getting overbought and we're reaching a pattern and price zone where everything is at its extremes, then a reversal is inevitable. It's very highly probable. And that's what we had. We had a massive pullback. But in the grand scheme of things, it's not big, but it's the initial move back. But there's a few things that we want to be hyper aware of, like really, really aware of, because it will impact the rest of the markets. And it did impact the rest of the markets. Everything pulled back. So let's just clean this up and let's just continue to read this as it was a story. Like, what's going to happen next in the story? Well, like any great movie, we don't know exactly what's going to happen, but we can probably predict with high probability. So this is the low. So this has now exceeded the low. But there's a few things we want to take into account. First of all, even though it's the initial move to the downside, the weekly momentum, if you go to the top left chart, is now officially bearish, where the blue line has obviously crossed below the red line, and we've had the initial move to the downside. Now, what that normally means is it's like 1, 2, 3, 4, 5, around 3 to 5, maybe even 6 weeks of sideways to down that we can anticipate with high probability. Hey, it's not what I want. It's not what I want. But we have to look at the markets so it can serve us, so we can make better, objective business decisions without the emotion. So there's a few things. So this is the biggest move to the downside that we've had in this whole move. It's even bigger than this one down here. This is the first indication that we've got a reversal. Now let's just remind ourselves what happened in April, right? If we just pull back to April, what do we have? Well, we had this movement to the downside, and at the time, it wasn't obvious to see if this was just a similar movement to one of these movements, and then we'll see a continuation, or was it the beginning of a correction? To the untrained eye, it's not obvious. But look at this. It's bigger than all of these previous moves. Sometimes by only a few, only by a little bit, but it is the biggest, right? And we want to be hyper aware of that, because it looks like that exact same pattern is happening again. So what we're going to anticipate is a bit more movement to the downside. We'll probably get at least some type of correction. People will tend to think it's just a minor pullback, and a lot of people are going to anticipate bigger moves to the upside. But what you'll find is the selling overpowers the buying, and then we should expect a deeper pullback, a minimum of 3 waves. But because the weekly momentum is severely overbought, it means we should expect sideways to down for quite a few weeks. So we may even end up exceeding the previous low. Hey, it's not what I want. It's not healthy for the markets, because there's going to be a couple of things that we want to take into account. I'm going to show you this. So we're going to CoinMarketCap. The current market cap is $2 trillion, $2.08 trillion. You can see that at the top. Let me just zoom in here. At the top, $2.06 trillion. Now that was 2.4 just around a week ago. Now, if money is staying in crypto and just coming out of Bitcoin and going to other projects, hey, that's not such a big deal. In fact, it's going to be healthy for altcoins. But if it's coming out of crypto and out of other altcoins and the market cap goes below $2 trillion, well, that is something that we need to be hyper alert of, because it's going to mean everything's going to pull back and we have to prepare for the worst case scenario. So let's just do a couple of things, because I don't want to panic you too much, because I've been projecting this for quite a while. And we said, look, we should anticipate some type of wave A, and we've got this nice clean wave A, this here. It was more like this. We should get a correction to the correction, which is like this mini A, B, C. And then we should get a finish of this wave 4. That's what I've been projecting for a while. And it doesn't mean it's going to happen. It's just highly probable, right? So we may get an extreme test of this $30,000 level. Hey, it's not what I want, but it's a common thing. The previous wave 4 zone, which is this, is a common zone for a wave 4 to finish. And we all show, and it falls in with this range. So we might get like a double bottom like this. And then we should anticipate the bull run of all bull runs to continue. Now, it might be a choppy 3, 4, 5, 6 weeks. September is known for being bearish in terms of Bitcoin and crypto, but then we want to be prepared for this, right? That's what I'm seeing. So just to kind of give you a macro picture, but then we need to prepare ourselves for the next 1, 2, 3, 4, 5, 6 weeks, what's likely to occur. So let's now just stay ultra focused on the immediate term. Let's just clean this up. Because look, this is just, again, I'm aiming to be objective and not biased. My bias is I want Bitcoin to win because it's so healthy for the markets. Let's just get rid of this, clean this up. We'll keep the rest of it there. So what should we anticipate as a minimum if we're wrong? Do you get what do you mean if we're wrong? Well, I just said to you that we might get this final leg, big leg down. But you get, what if you're wrong? What if it's only a correction and then it continues to the upside sooner? What's the minimum that we should expect if the opinion of the market is wrong? What should happen here? Okay, that's what I'm going to teach you today. I'm going to show you today, and it's going to give you an edge over everyone else in the market, because buying and selling Bitcoin is a zero-sum game, meaning that there needs to be winners and there needs to be losers. For there to be winners, there needs to be losers. People make money, lose money, but there's millions of people playing the game. So we want to be on the winning side. What we should always anticipate is a minimum of 3 waves. Doesn't matter what it's going to do, a minimum of 3 waves. And at this point, we don't know if it's going to be just a correction like this, or if it's going to continue to the downside. But at the point that this occurs, we will have more information. But at this point, we can just go, what's the minimum to occur? Right, that's what we're going to focus on today in the next 3 minutes. In fact, I'm going to bring my timer out. I've got a little timer here. I want to keep it sharp for you. All right, so there's a couple of factors. First factor is price retracement. A typical price correction is 50%. So we're going to click this low. In fact, I'm going to draw arrows for you. I'm going to click this low. I'm going to measure this low to this high, and we're going to get a retracement. So we're using the where is it? Fibonacci retracement tool. By the way, I've created a free Elliott Wave and Fibonacci masterclass. So if you want to be able to read the markets like me, take it. It's free and it teaches you this. And also you'll get more from my videos, so you get some of the method behind the madness. So what we're going to do is going to click in line with this low here. I'm going to do it here so it's neater for us to see. We're going to click this high here, and the key ratios that we want is 50%, 62%, and 78.6. And then we're going to do a simple time retracement. Now time I don't cover in my masterclass just because it's a bit more advanced. but I'm thinking of creating a time analysis course. A typical correction should be a minimum of 50%. This blue line, this should be the minimum time. A correction should not complete. More often than not, it does not complete before 50%. So we've got a date to say by the end of September, that should be the minimum time that the correction should take. That's the most common. And the typical maximum is 24th of October. So there's a lot of time there. It's like 4 to 6 weeks, just as we said with the momentum indicator. So now we're going to draw this beautiful box. This gives us a nice price zone. No other information to be done here other than we're going to wait for a wave down. We'll probably get a correction to the correction, and then we'll probably get at least a third wave down. And at this point, if it does occur this way, we want to then look at the weekly momentum, top left, this down here. If and when this gets down to here, we want to reevaluate the market. What is the price? And then we can make an objective decision. And then we also want to be aware of the daily chart of the momentum. When it gets oversold, it will probably coincide with this low down here. And then we can see if we're going to get a correction to the correction and then a third leg down. So there you have it. Bitcoin, it's a powerhouse. We know it's changing the world. You know, El Salvador, legal tender, storage of value, better than gold. You know, none of that's changed and it's only getting better. But short term, medium term, what drives the market is speculation, fear and greed, optimism and pessimism, fear, uncertainty and doubt, fear of missing out. All of that, it drives the markets. And what I'm showing you with Elliott Wave Fibonacci is measuring psychology, and it becomes quite predictable. So again, just to recap, at the beginning, we said we did a video on the 5th of September, which is only a few days back that we posted it, but I think I recorded it mid last week or Thursday, Friday last week. And it said, look, we're just anticipating this pullback, just textbook style. It's done that pullback, just almost exactly as projected. And it's not about being right or wrong. You know, it's good when we're right, but we just want to have the probability in our favor. So this is what to expect as a minimum, around below the 41,000 range up until the 35,000 range, $35,000 range, by the earliest of 30th of September. So that's around 3-4 weeks. Be patient. We're looking to buy Bitcoin. We want to look for a swing high. But right now, just be prepared that it's going to probably impact the rest of the markets. It's not going to be, I don't think it's going to be as extreme as what we experienced here, but it'll be a micro version of that. But then also keep in mind the longer term picture. If we do end up getting a bigger correction like this, then we should anticipate when the market is panicking, crying, you know, people just portfolios are down. This is going to be one of the best times to accumulate in all of human history when it comes to Bitcoin and crypto. Okay, I know the crypto has been around for only 12 years because we should anticipate this final leg, which will probably last for 3 to 6 months. And that's where serious money is to be made. So short term, be prepared. Long term, also be doubly prepared. So you've got USDT to pounce on the opportunities that come. So there you have it. Bitcoin update. We're reading the markets like a book. Let me know how you're finding this, because hopefully you're seeing, because we're doing consistent videos, how we're reading the markets. But take my free masterclass on Elliott Wave Fibonacci so you learn how to do this. And it's about sharpening your axe. So even if the markets are going to a bit of an uncertainty zone, you want to train yourself so you're ready to take the opportunity when it comes right in front of you. So there you have it. Like, subscribe, hit the bell notification. Let's finish with a random quote. I'm going to pick a random chapter. Let's see what pops up in my book. It's chapter 1. All right, let's do it. You must be in it to win it is the name of the chapter. And it says, I've missed more than 9,000 shots in my career. I've lost almost 300 games 26 times. I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. Very, very true. It's Michael Jordan. Michael Jordan. So let's learn from Michael. It's okay to take a few losses, but now prepare, anticipate, and be ready to execute. See you soon.